This is a presentation of CNN Business News.
Live, this is Business Asia with Bill Hartley in New York.
Japan's over-the-counter market has risen by more than 30% since the beginning of the year. Joining me to discuss that market and small capitalization stocks in Japan in general is Thomas Norton. He is the president and CEO of Thomas Norton and Associates, which specializes in these stocks. Tom, welcome to Business Asia. Good to have you. The rest of the market is just sort of churning around, really going nowhere. The over-the-counter market has been strong now for quite some time. Why? What's propelling it?
Well, Bill, I think the chief reason is that the smaller capitalization shares in Japan, principally OTC stocks, have begun to come out of the recession much earlier than the bigger capitalization stocks in Japan. The fiscal year that ended in March of 1994 saw rather sharp increases in sales, operating, and recurring profits. And the market is quite frankly just responding to that.
But why should these companies come out any sooner than the Hitachis, the Nippon Steels, and so forth?
Well, many of the large capitalization shares, as you know, are predominantly export-oriented. And they continue to be battered by the consequences of the high yen. And many of the smaller capitalization shares in Japan tend to be domestic-oriented, commerce and service-oriented companies that don't suffer the same kind of problems that the high yen presents itself. And the consumer in Japan, who is largely responsible, of course, for the domestic economy, is beginning to spend more than he has over the past 3 or 4 years. And the smaller stocks in Japan are seeing the benefits of that in their bottom line.
As these companies come out of recession and begin to grow, don't they gradually become more and more like the big companies, become export-oriented, and fall prey to the same problems that the existing large companies have?
Well, if you take a look at the OTC market and the constituents that make up the OTC market, it's very clear to see that the differences between OTC and TOPIX, which is the first section index in Japan, are radical. OTC is 50% of OTC issues are commerce and service, which are largely domestic oriented with no export exposure at all. And 50% of TOPIX, which is the broader market indice in Japan, is manufacturing, which is largely export oriented. So I think it's relatively safe to say that these companies are somewhat immune from pressures from the high yen.
Small companies in Japan also have a notoriously high failure rate, a very high bankruptcy rate.
That's true for companies that aren't listed. The failure rate for companies that actually list on the OTC is quite remarkably small. A large part of that, and a large reason for that, is because of the high difficulty in listing shares in Japan. The actual listing requirements, as put on by the Ministry of Finance, can be quite rigorous. So you don't get many weak companies that list.
And as these small companies come out of recession, you can't exactly say are they pulling the big companies with them, but are they stimulating the big companies enough that they can begin coming out of recession?
Well, the small companies in Japan tend to be rather independent and therefore in a totally different domain than big companies in Japan. They're not part of the Keiretsu system, which means inter-cross shareholding. They tend to be, as I said, independent, run by independent businessmen and owners and founders who are not part of the Mitsubishi or Mitsui or Sumitomo group. Therefore, their success, generally speaking, has very little bearing on bigger companies in Japan.
Okay, we have about a minute left. What areas in the market do you like, and what companies in those areas?
Well, there's a number of companies that are benefiting from changes within the consumer area. In particular, a move towards better value for the dollar you're spending. So there's a number of discount retailing stocks that do look quite interesting now. One stock in particular that we like quite a bit is called Nihon Jumbo, It's a photo processing company that is taking an enormous amount of market share from the market leader, which is Fuji Photo. They're doing that by pricing their photo processing development 40% lower than Fuji Photo. They do that, of course, by having lower paper costs and lower distribution systems.
How about in the manufacturing area, the industrial area?
Well, the industrial area, as I mentioned before, is largely underserved by the OTC market. There's very, very few dynamic
This must be the breeding
stocks.
ground of the giants of the future, ultimately.
Well, the giants of the future, I think, will come mainly from the service area and the retailing area, much like the U.S. I mean, we're trying to identify the Walmarts of Japan and the Microsofts of Japan and the Intels of Japan.
Good, have you?
They tend not to, well, as I said, Nihon Jumbo, we do believe is a quite dynamic company and does possess a lot of the different growth characteristics we think that will make it a giant as the years go on.
Okay, Tom, thanks very much for
Thank you very much.
Thomas Norton, President, CEO, Thomas Norton and Associates.